John Meuret from Meuret Grain Company is our corn and soybean market analyst this week. At its Ag Outlook Forum Thursday, the USDA said it believes U.S. farmers will plant 90 million acres of corn this spring, up from 88 million in 2015. The agency is projecting a small decrease of 200,000 acres in soybeans, leading to a total of 82.5 million. Wheat is set to take a sizable reduction. The USDA thinks farmers will scale back plantings nearly 7% from last year to 51 million acres. In late March, the USDA will firm up its estimates when it releases its prospective plantings report on the 31st. We discussed the acre breakdown when we talked with John Wednesday afternoon in Brunswick, Nebraska. We also talked about U.S. ethanol production, fund positions, and price movements in corn and soybean markets.
We haven't moved at all. Corn's still kind of in that $3.50 to $3.75 futures range, and soybeans are stuck between the $8.60 to $9 range. We're stuck.
What happens here? What moves this thing one way or the other?
I think we got to have an event, and the event can be weather. We've talked about it. The event can be exports. We've talked about it in the past. We've just got to find something new, and today we can't find it.
With as much grain as out there, do you think a delay in planting would cause that much of a rally?
I think it'd give a little bit of a rally, Jeff, but it'd be very muted because all this pent-up selling is held up, and I think it'll come to the market rather quickly if we see the board price try to move up beyond this range.
Let's talk about a few demand scenarios and start in exports. Now, is it a different story between corn and soybeans?
I would say it is. But it's a different marketing too. And what I mean by that is the soybeans are really an October to January or February product on the exports, and we're getting towards the end of February today. Once those are done, it's going to feel like we don't have any exports anymore. Corn, however, is very, very back-end loaded, and so we're going to start loading about now. They'll pick up a little bit through the spring to meet the USDA numbers, and hopefully we're able to pick up a little additional. But it's the tale of two cities. You know, we've got the beans; those are done, it's over, and now we're going to have some corn hopefully kick out of the country. So
the assumption would be that corn exports can pick up here.
I would sure hope so, Jeff. The problem is that we need to pick up just to see where the USDA is at and match that, and we've got a problem, another billion bushel behind that we need to get rid of. So we need to not only start exporting more, but export beyond that to get rid of the surplus. So
one of the other consumers of corn would be ethanol. How high are ethanol stocks right now?
You know, they're near record high, Jeff, but we saw a report this morning, this is Wednesday, and we saw the stocks down a little bit and production up. That's a really, really good sign. And I think the trade was fearing that we'd see stocks up again and production down, meaning demand is less. But it's actually, you know, going to be at a manageable level. I think the plants are going to be disciplined enough to scale back production to meet the demand.
Yeah, how much of a concern are higher ethanol stocks and lower oil prices?
I think they're a big concern, but we're going to have to use so much of it anyway. There's a mandate. We're going to have 10% in all the gallons. I think ethanol is here to stay. I know I've taken a lot of questions from farmers. They say, I heard the plant's going to close down. I don't think so. I don't think it's that kind of environment. Oil feels like it's bottoming, or at least within $30 of bottoming. So hopefully we can stabilize, and I think the ethanol guy is going to be fine.
Let's move down to South America. What do we know about harvest results from Brazil?
It's excellent so far. Excellent. If you remember in the north when we talked, there was a dry spot. They picked up nearly perfect rains in the last 60 days. In fact, now the concern may be a little too wet for parts of the harvest up there, but they've got really, really good crops coming at them. And as they work south, Argentina's the same story. They were dry, pick up nearly perfect rains in the last 2 weeks, and now there may be a touch wet in Argentina. So I think what we're going to find in South America is really, really good crops all the way down. And on that same note, Jeff, we talk about what they're going to plant following the beans. It's corn. You know, their export tax on corn is now 0. You know, beans, I don't remember, it's either 25 or 35,
in Argentina,
but they're going to have a substantial increase in corn planting acres in Argentina. So we need to watch that here in the U.S.
Is it a concern long term about how many acres Brazilians and Argentines are putting in?
Absolutely. Absolutely. And then it's least cost production. So if they're able to produce it cheaper than we are, we're going to kind of put ourselves on a little bit of an island here, especially with corn, because I think the ethanol is going to keep our corn price propped up a little higher than the world market. So to go hit that next level will be a challenge for us.
Last time we were on, we talked about fund positions. Update me on where they are.
Well, they've covered some fund positions. You know, they were record short in a lot of these commodities, and they've covered them, but they've covered them very, very easily, I guess. It hasn't been disruptive to the market. So, you know, we saw corn rally 15 cents, and it did it about 2 weeks, and then it fell right back down. So, you know, wheat's the same way. We rallied up 25 cents, and we broke 10. So they're able to kind of take the excess farmer inventory and offset that with their hedges when they need to get out of them. So
has there been much grain moving?
No, there really hasn't. Nobody wants to, Jeff. I think there's a lot of contracts being filled. You know, we see trucks active for existing sales, but additional sales are hard. I think you'll see the farmer fill existing contracts and try to think long and hard about what his plan is going forward. So,
how much help has basis provided?
None. Basis hasn't moved, Jeff. Bean basis hasn't moved, corn basis hasn't moved, and the farmer is frustrated. I think that's a fair way to put it.
Meaning, what are the selling strategies right now?
I think he needs to hope for what you talked about, weather. I think he needs to watch his cash flow and sell in front of it. I always tell guys, don't back yourself in a corner. So if you can see out in July or August and that price is $380 or $390 cash, you should sell it and walk away. What you don't want to do is wait till you have to have cash, drive to town and sell $3.20 corn. So.
We also talked last time about planted acres. Do you have another impression about where the U.S. is going to be this year?
I do, Jeff. There's not enough switches, in my opinion. I think you're going to see corn up 2 to 3 million acres and beans down about that much. And I think the corn switch needs to be bigger. If you look at the profitability, corn is much better than soybeans today. And we're hearing from a lot of producers here anyway that are going to stay with our rotation. So I think the market needs to encourage some switches here.